Hello and welcome to Business Incorporated live on Channels Television. Well, the second trading day of December. Moving on quite well. Let's get a check on what to expect on the show today. South Africa's economy contracts after a slump in food production. That's for the third quarter of 2024. An International Monetary Fund approves $360 million loan disbursal for Ghana. Plus, the Kenyan shilling registers a slight decline on increased pressure to acquire US dollars. It's great to have you on the show. Let's get a check on how the markets are shaping up right here for the intraday trade. Starting off with gold now. We see gold prices are steady today. The market unchanged still, $2,636 per ounce. That's for spot gold. And we see the US gold futures. That's also unchanged, $2,659 per ounce. We're seeing the dollar, the DXY, still rallying at this time, but the metal there losing that appeal at this point. So we're seeing gold take a chill pill at this time with the rally we've seen so far. Other metals that we track, we see the likes of silver, that's up about 0.1%, $30.51 per ounce. Platinum, that's on the flip side, down 0.3%. Trade today, and we see palladium below sub $1,000, down 0.2%. Let's get a check on what's playing out with oil now. We see there's been a mixed sentiment earlier, but now we're seeing some strong gains there with Brent, $72.61 a barrel, big 1.10%. So we're seeing this first trading week of December for the oil market looking quite strong, 1.16% WTI, $68.90 a barrel, coming off the more than 3% drop we had last week, but we're seeing December kicking off quite well for the oil market. To other stories now, we see the federal government has successfully issued a $2.2 billion eurobond, marking its return to the international capital market after a 2-year hiatus. According to the Debt Management Office, the bonds attracted a peak order book exceeding $9 billion, indicating strong investor confidence. According to the office, that the issuance comprised of 2 tranches, which include a 6.5-year bond maturing in 2031, priced at a coupon rate of 9.62%, and a 10-year bond maturing in 2034, priced at 10.375%. And despite passing the second reading of Senate, President Bola Tinubu's tax reform bills have continued to generate controversy across the country. The most vocal opposition have been from northern governors who claim the bills are against the North. At a town hall meeting organized by Channels Television, some of the concerns came to the fore as participants discussed the implication of the tax bills on the country's tax system and the economy in general. Take a listen.
Is the special town hall on tax reform bills.
It's a gathering of experts, including tax practitioners, politicians, journalists, economists, and their mission is to discuss and address some of the controversies that have greeted the 4 tax reform bills that have now scaled second reading at the Senate. Opening the floor is the man whose team produced the controversial tax bills, the chairman of the Presidential Committee on Fiscal Policy and Tax Reforms, Mr. Taiwo Oyedele, and for the obtained time, he explains the objective of the bills.
There'll be exemption from withholding tax. Also for small businesses, they don't have to charge withholding tax, neither do they have to deduct it on their vendors. There'll be exemption for them in terms of deducting withholding tax from their vendors. They will not have to account for VAT when they invoice their customers. They will have the opportunity of simplified accounts that does not have to be audited to reduce the cost of doing business for them should they have to file returns.
According to him, rather than the opposition against the bills in some quarters, especially state governments, the states should actually embrace the bills because of what they stand to gain.
These bills will also allow states to enjoy tax exemption should they issue bonds. Today, federal government bond is tax exempt. State government bond is not tax exempt. These bills are trying to correct that inequity. We must recognize that this is a federation and we must empower this.
After that, there were interceptions from the panelists who all claimed to have gone through the entire bills before arriving at the decisions.
The issue of VAT, I think we might need to think about VAT going to 15% in medium term. To my mind, 7.5% VAT, I agree, is among the lowest. But when you look at our income capacity now, as a country, our GDP just lost 250% of its shares, from 400 billion to about 200 billion. No text to exchange rate. There's nothing the committee can do about that.
In my own just simple arithmetic, the people of Sokoto should be clapping and singing to the high heavens that now they have an opportunity for them to add value. The same thing with my state, Kano.
It was not all a pat on the back for Mr. Oyedele and his team, as some concerns were raised on the process of leading to the drafting of the bills.
Free zone community has a concern about that bill, and many people have not addressed this. Even you have not addressed it while explaining the work of the committee to the National Assembly. I want to state that while the intention of government and your committee to modernize the tax framework in Nigeria is salutary, I want to say to you that some sections of that bill, that is the Nigerian Tax Bill 2024, some sections that are in that bill are inimical to the survival of the Nigerian free zone scheme.
With more engagements expected to follow before the bills eventually become law, it is expected that the reservations about the bills will be laid to rest to pave the way for its implementation.
To chip in a few things, right? But allow me.
And now to our first conversation. We see Nigeria has a long history of tax reforms, each aimed at boosting government revenue and stimulating economic growth. However, recent policy decisions and proposals like this fiscal reform bill, also the electronic money transfer levy on fintechs, have continue to spark reactions at this point. Well, joining us to unpack all of this, we have Professor Iwa Salami. She's a professor of fintech law and regulation, University of East London, joining me via Zoom. Great to have you in the show.
Thank you for having me.
So I'm sure you've been following. Yesterday we had that town hall meeting on the proposed tax reforms. Why do you think this bill is getting so much reaction in Nigeria?
So, of course, this bill is getting so much reaction because whatever affects how people, spend and how people sort of, have access to the monies that they're going to have to spend in terms of, monies that they've earned, whether as individuals or as small businesses that are quite pervasive, I would say now, in Nigeria, as has always been the case. Then those are areas and issues of interest. And this bill particularly comes at a time when the government wants to actually consolidate this tax framework in order to make it more efficient, fairer, more transparent, and for any country that wants to be on a trajectory, if you like, for economic development, the way that they collect taxes and the tax framework is particularly significant. And therefore, the idea around this reform is to actually get that framework going, consolidate the tax framework that exists, but also making it more transparent, fairer, and much more efficient than it currently is. And of course, part of the reaction that we're getting from the northern parts of the country is as a result of the fact that in terms of the way the revenue is generated from the outcomes of this tax reform would happen, it would happen in such a way that the redistribution of the revenue would pretty much be allocated more to the parts of the country that facilitates, if you like, that are much more facilitating of goods and services, which then therefore means that those parts of the country that aren't as productive in terms of sort of production of goods and services may end up suffering. And so that contention is around that. But of course, the idea really is around making the system fairer, and particularly the way it's been viewed, the existing system has been viewed. The idea has been really that fairness hasn't quite existed, in that certain parts of the country, particularly in the north, have actually been far more beneficial, if you like, in the redistribution of tax revenues.
Right. So in your opinion, do you think this bill will eventually become law? How are you seeing it? What's your outlook?
I think it's so important that for any country that wants to maximize the economic development process and growth, it's so important that we have an efficient tax system. And I think it would have just been a question of time for any government that really wants to effect change to actually take a look at the tax provision of the country and institute the necessary reform. So I think I'm very optimistic that this reform would be passed. I think it's so important that it's obviously managed carefully, that everybody is brought along, understanding the underlying rationale as to why this has to be done. But I think it's so important that this is instituted in order for us, I mean, if the country is going to actually carry on that trajectory of growth, it's so important that the tax system works in support of that, the country's economic development agenda, I'd say.
Right. And talking about development, how do you see it impacting, startups and fintechs?
So, well, I presume that the linkages, of course, with the taxing of fintechs and particularly the area that has come up of late is as a result of the I'd say the implementation really of the electronic money
transfer
levy that has been instituted for a few fintech firms and services. And I think, again, I mean, we know that when it comes down to it, the actual amounts we're talking about here is 50 naira for every 100,000 transaction. That amount is minimal, but minimal relative, I'd say, to obviously the value of the naira now. But I think that with respect to fintech firms, I don't think there's a significant impact on them. There will be a significant impact on them beyond, of course, the operational challenges of actually instituting it, because, of course, the onus is on them to ensure that that deduction is made and then actually transferred to the Inland Revenue Service. So from that respect, yes, there might be some operational issues, but in terms of the actual costs on them, I think so far that cost of 50 naira per every 100,000, every 10,000 transaction, I think is quite minimal. I think the main question would be, how long are we going to stick with this 50 naira levy? Is this something that has a potential to increase over time, in which case then there might be a knock-on effect on the recipients of those services, and also sort of long-term accessibility actually to financing from investors of fintech products and services or fintech startups, Yeah.
And definitely, I've seen a lot of reactions on social media at this point, with some customers already hollering about this 50 naira transfer levy. They're not happy at this point. So talk to me about how this would impact, demand for these fintech services.
So I think the key question here is the tension, if you like, between the agenda to facilitate financial inclusion, as well as the agenda of the country wanting to ensure that they, benefit, if you like, revenue-wise from the growth of the fintech space and financial innovation, because of course we know that there's a lot of growth. But we need to bear in mind that we still have about 60% of the country that are unbanked, that do not have access to finance. And I dare say that this 60%, can be financially included even further through electronic transfer, digital finance type transactions, which is where we see the positiveness, if you like, or the benefits of financial technology, the fintechs, I'd say, and financial innovation. So when we kind of introduce these types of levies, the people that are going to be most impacted are basically the people at the bottom of the pyramid. These are the people that we really want to financially include. And therefore, there's that tension between, yes, we need to get some revenue from this, blossoming and buoyant industry, but at the same time, we need to not forget the rationale really is to facilitate financial inclusion through financial innovation. So I think we need to actually get the balance right, and it would be very important that the government has this, at the back of their minds, if there's a potential to, one, increase that fee of 50%, of £50, but also bearing in mind that the people that are, as I say, are going to be most affected are the people at the bottom of the pyramid, who that amount, as you said earlier, might be huge for them. And given also the fact that those types of people really engage in quite a number of small transactions. So although I said 50% is, 15 naira is a small amount, those types of people, if they engage regularly in, 10,000 naira transactions, then it means they're going to be paying much more. And that's what we would expect would happen, in which case then the system really would have a negative impact on them, i.e. a negative impact on the people that we really want financially included. And if we place all of this in the context of, the UN SDG goals leading up to 2030, which is really all around, inclusive growth, economic inclusion, which financial inclusion is a part of. I think the government needs to bear all of that in mind and see how this may impact on those long-term goals, which basically links with our positioning in fulfilling our own obligations to the UN SDG goals.
Right, and talking about investments at this point, how do you think? Because I know most of these investors like to, fund most of these fintechs in Nigeria. At this point, seeing that there's a huge gap, and that looks quite profitable. How would you say this will shape investor sentiment? For most of these investors that want to fund the fintechs, and maybe an outlook for 2025.
So we know with fintechs, it's all about the opportunities and the markets that the market that's available. And like I said to you, we still have this 60%, particularly in Nigeria, gap that needs to be breached in terms of 60% still being unbanked. So there's still huge opportunities here. So whilst there's still huge opportunities for which, of course, as you say, investors will still want to support and capitalize on, from that perspective, really, the market is still there. There's still a lot to play for. But I have to say, the potential worry might be, how far do we go? At the minute, it's, as I said, 15 naira per every 10,000 transaction, which seems to be a small amount, but a small amount of this 60% that we want banked, to whom the market is actually, targeted at. So in a way, investors may not see this as a big problem, but then the fear and worry about the extent to which the 15 naira can go, the extent to which that there may be potential to increase it, and also maybe necessarily the extent to which that may have an impact on the people we're trying to actually financially include, cater for 60%, would be on their minds. But as I say, there's still that 60% to look after, and there's still a lot to play for. So that's what I'd say about that.
And I know some of these fintechs, they like to ride on that pride there that they can have free transfers. You can have free transfers for as much as you want, maybe 5 times or more, but that would definitely change the dynamic. You know, I'm just imagining if I have just 10,000 naira in my account, I'm trying to make that 10K transfer, but I don't have that 50 naira. That would definitely, you know, be a bummer. But we'll see how it all plays out at the end of the day. Thank you so much, Professor Iwa Salami, Professor of Fintech Law and Regulation, University of East London. Thank you for coming on today.
Thank you for having me.
All right, we'll take a break now. When we come back, we head straight to the markets. So stay with us. All right, we'll see December. Moving on now with the trades. Now, let's get a sense of what to expect for the intraday trade. We have Anita Edit with the details. And on the board, I see it's a marginal gain there for the NGX at intraday, 97,784 points. But it's green anyway.
Yeah, Ladi, first trading day of December. And of course, you look at today's
That's the second
third.
today.
Yes, today's the third. And that tells you that we have just about 27 and a half days left to the end of the year.
Right.
So also counting down, you've always been mentioning Santa Rally. So
Right.
I don't know if this is, we normally say one of the two colors of Christmas, or the two colors of Santa,
Right.
red and green. But this time we're seeing the intraday number picking up from the 0.23% that we saw yesterday. And also we saw that the market had entered 97,000 and above. But this was largely due to, we had that announcement by Waxing Cement, which is a Chinese cement company, making a $1 billion bid for a deal between Swiss building materials giant Holcim, which is also a part of Lafarge. There was that there was that partnership that they had with Lafarge sometime some few years ago. So Waxing is making an 83.81% buyout of what Holcim has in Lafarge. So that's actually what prompted the market into the green territory, and it's still going on as we speak now.
Well, we'll definitely keep tracking that deal for sure.
Yeah, you're going to take the stock market, so I'm sure you're going to give more details about that and so many other factors playing into the market for the start of the first trading week of December. Okay, so now let's get more details of the intraday market numbers for major markets across the world. We actually track about 4 regions within the world, and we always start off from African continent, where we see the NGX all-share index, like we were mentioning, by a tad 0.05% in the green for the intraday numbers, and market numbers we'll be looking out for at 2:30, the close of trading for Nigerian time. Johannesburg Stock Exchange all-share index 0.78%. And of course, it has also climbed in from the 85,000, which we saw yesterday at intraday and for the close of Monday's trading session, and into the start of intraday trading session, 86,397.88. That was the last track that we had for the Johannesburg Stock Exchange all-share index on the African continent. And for the other 2 markets within the African continent, it looks like the greens have it for major markets for the African continent. EGX 30 for Egypt, 0.21% intraday market number, 30,589.34 for that market index. While for the Nairobi Stock Exchange all-share index for the close of Monday's trading session, yesterday we saw the market number at 111.57, but now the 0.51 at intraday. But at intraday for today, it's 112.74, up by 1.08%. That's the last track that we had for the market on the African continent, or for the Nairobi Stock Exchange all-share index. Okay, so now let's get a closer glimpse. Yesterday we had the Debt Management Office conduct the second eurobond issuance for Nigeria. That's more after a 2-year hiatus. But we saw that it was largely oversubscribed. It's all over the newspapers now, or all over the news via the internet. Everywhere you search, we even had that story that Nigeria's eurobond was oversubscribed by about 9 billion. The offer was $1.7 billion, but the government was able to allot $2.2 billion. And this adds to like a potpourri of debt instruments from the federal government, talking about the Sukuk, talk about the domestic dollar bond, talk about the FGM bond, and now talk about the Euro bond, always oversubscribed. And then so we'll get a market analyst to tell us more details about why this, the Nigeria's debt instrument, the federal government's debt instrument is always having this, oversubscription. It is actually a good deal, or it's a positive move for the economy. But Why is this always being oversubscribed? To give us more details on that, we have Odinaka Nwokonkwo, fixed income dealer with Access Bank, to give us details on that. Thank you for joining us, Odinaka.
Hi, Anita. How are you?
I'm fine. Thank you so much. So I'm sure, we saw Chapel Hill are the ones carrying out this transactions of the eurobond, $1.7 billion eurobond, which was oversubscribed. Now, tell me, what is the center of attraction for Nigeria's debt instrument, particularly with this latest eurobond bond offer by the Debt Management Office?
So, like you said, yesterday, Nigeria was able to raise 2.2 billion across two instruments, 2029 and 2031 and 2034. When you look at the rate, it's a 6.5-year instrument and a 10-year instrument at 9.625 and 10.375. When you ask why Nigerian instruments are always oversubscribed, I think we have to look at three things. The first one is, what is the size of available sub-Saharan African bond, eurobond? I think the three major ones are the Angola, Egypt, and Nigeria. So when you look at the depth of that market, it's just these three papers with Kenya having a bit and the Ghana that just defaulted. So for any asset manager, hedge fund, PFA, global PFA that wants to pick up yield, I think you have limited options across the sub-Saharan Africa. So it's either you go to Angola, you go to Egypt, and you go to Nigeria. At least these are the ones trading actively in the market. Also, you look at the yield pickup. For yield, I think the guidance on that, the IPT, when they released that circular, it was around 10.125 on the 6.5 and 10.625 on the 10-year. While the secondary market on the equivalent 2029 paper is around 9.7. So when you look at that guidance, it gives you that, it tells you that everyone will likely jump at that offer. Looking at the yield is quite attractive. The Nigerian 33 closed yesterday around the 9.9%, and you have a new issuance around 10.3. So that's quite very attractive. Then the third, you have to talk about what is the global outlook for interest rates. When you look at the global outlook for interest rate, considering what Trump has been saying about tariff, you kind of see that there's likelihood for maybe inflation to kick up in America. But however, there's also that when you look at the precedent, the Fed has cut interest rate twice this year. So as that is happening, you keep seeing that desire to be able to take up decent yield elsewhere. So those are the cumulative factors that kind of drive investor sentiment around bidding for some of these instruments.
Quite interesting. Okay, so now my next question is, okay, with all of this, what is the overall impact of this Eurobond issuance oversubscription to the general economy? We know that, yes, it's supposed to partly fund the deficit in the 2024 budget, but what does it entail for the entire economy?
So when we look at the Eurobond issuance, right, it shows that there's a growing investors' confidence in Nigeria. That is not without a doubt, though at a very a bit of a high cost. I think even when you look at this Nigerian treasury bills, you'll see it around a 30% yield. And also, we can't deny the fact that there is improved FX liquidity in the market, though the rates may be a different conversation, but there's a bit of transparency and liquidity that is commendable from the central bank's side. So what we'll be talking about is a proper integration of the fiscal side with the monetary side to be able to drive down inflation, which is the key thing that kind of drives these interest rates. We saw the last MPC where the CBN governor still cited the fact that inflation is still high at 30.88, and they hiked that rate by 25 bips. So that is still a major concern, the rate. So a bit of a proper integration with the fiscal side should be able to drive down this process. When you look at the last GDP report, Q4, the growth was about 3.46. But something quite interesting was that most of it came from the service sector. I think the financial and the insurance sector contributed around 30%. And the manufacturing sector, a mega 2.18. So that's a very big concern. And this will be attributed to the high interest rate environment we are currently in. So those are the things you will be seeing saying that how this impacts the general outlook. So generally, the high interest rate environment is kind of still very affecting the manufacturing sector. But two things we can't deny: improvement in FX liquidity and also growing investors' confidence in Nigerian paper. Those two things cannot be denied.
But Inaka, it's quite interesting. We would like to know how the U.S. Next week that the U.S. Fed will be meeting on the 17th and 18th, as I cover about some 2 weeks from now. So we'll get to see how that will affect the global, the fixed income markets as well as other instruments. But thank you so much for your time on the show.
Thank you.
I was Odinaka Nwokonkwo, a fixed income dealer with Access Bank. Okay, let's talk about the Middle Eastern markets, which are mostly in the green. They were actually mixed, but then the numbers are still changing. And why this is because the oil markets, some of the oil markets are at some point going back and forth. So, and they're looking up to the OPEC meeting, which is scheduled to hold in the next, in just about 2 days from now. That's on the 5th of December, which was actually shifted from Sunday, December the 1st to Thursday, December the 5th. So that's why some of the markets here are in the green, particularly the Dubai index 0.50%, while the Abu Dhabi was down by 0.28%. For the other two markets within the Middle East, we see Saudi Arabia and the Qatari Stock Exchange Index printing that the same sentiment that we saw on the other two markets within the United Arab Emirates. So that's it for the Middle Eastern markets. And from the Middle East, we go over to the US, where we see stock futures, a little change. We saw the Dow Jones Industrial Average closing Monday's trading session in the red, and it's still picking up for the stock futures ahead of the opening numbers for Tuesday's trading session, while the S&P 500 and the NASDAQ, they maintain their highs. Both indexes, they touch all-time fresh intraday highs and close at record level, which is what you see here, 6,047.15 for the S&P 500, while the NASDAQ index, 19,403.95 for the intraday, also for the stock futures. But for the Dow Jones Industrial Average, it lost about 0.29% previously, and this is what we see. So, well, what are traders looking out for? First, they'll be looking out for the jobs opening report, which is due later today. And then the main event will be the November payrolls data, which is scheduled to be released on Friday, just about a couple of days from now. And also, they will be monitoring. They'll be monitoring some comments from U.S. Fed governors. Two of them, both today and tomorrow, and that will also give a more like a precursor to the Fed meeting, which is scheduled to hold in about 2 weeks from now. So that's it for the U.S. markets. And finally, for the Asian markets, we see a higher closing from the major bourses that are tracked on the Asian markets. We see the Nikkei 225 climbing back to the 39,000 points. Yesterday, it was about 38,000. But with the 1.91, almost 2% gain, we see it roaring back into the 39,000 points. The Kospi all-share index for the South Korean markets, that was up by 1.80%. All of them tracking that strong gains that was recorded on Wall Street. And of course, at the same time, we also see that South Korea's inflation rate, it climbed in November to 1.5% year on year, and that's higher than the October inflation numbers reading of 1.3% and lower than the 1.7%, which was expected by economists. So we're talking inflation in the US, in South Korea, in Japan, in China. Inflation is still something to consider. But talking about the Chinese market, let's see how that market closed for Tuesday's trading session. It was also in the green. So most of the markets across the Asian continent, across Asia, they were in the green, including India's. Okay, sorry, Shanghai closed in the red, as well as the Nifty 50, and they're also battling inflation. So, Ladi, that's a wrap for the market intraday and the close analysis.
Quite interesting, the developed economies cutting rates in 2024. It remains to be seen what plays out in 2025. Are we going to see inflation rear its ugly head again in most of these markets?
Laddie, I think I tell you for free, because I bought, not bought, I've had my own crystal ball for 2025, and I think the Trump threat is getting much more, I think it's becoming much more apparent. Obvious.
Right.
And let's not forget that inflation and high interest rate dominated the better part of 2021 up until, I think, towards the later part of 2023, before we now began to see that moderation. So it just might have a comeback in 2025.
Comeback, inflation comeback.
Hope not. About that, but let's
definitely, we'll keep track of that. Thank you so much, Nathan, for giving us most of those details. And let's take it on to Europe now. See, the US dollar, questions about the dollar being under threat, with comments made by US President-elect Donald Trump, giving the impression that the hegemony of the dollar is in danger, and he vowed to do everything to protect it. But how likely is de-dollarization when so much of the world's business is pegged to this currency? Let's hear more now from DW correspondent Vada Emrach in Berlin. Great to have you, Vada. So these comments were made as kind of a signal to the BRICS countries who have often voiced a desire to replace the dollar. Tell us more about this.
Thanks for having me. Yes, Laddie, the BRICS organization is quite powerful. It has some of the most powerful and most populous countries in the world, which makes this alliance huge in terms of sheer numbers and economies. So China, India, Russia, Brazil, and South Africa together have frequently discussed the idea of toppling the dominance of the US dollar. Now, in 2024, Russia is the chair of this organization and has proposed a cross-border payment initiative where members will use their own national currencies to trade. This new multi-currency system is in some ways an attempt to set up alternatives to the US dollar. And now this wouldn't be the first time that BRICS countries set up something like this. They also established the new development bank, which was created with the purpose of using shared resources for development projects and infrastructure all over the world. So this new initiative from Russia is kind of what drew the ire of Donald Trump, who then made comments warning others to not challenge the dollar.
The dollar is used globally for trade and the euro's dominating the European market, but has the European currency ever threatened the dollar?
Well, so the euro is a relatively young currency. It was introduced in 1999, and at first it was only used in electronic payments. So it wasn't even a physical currency in the sense of notes and coins. That happened in 2002 when the physical currency was printed, and 12 European Union countries participated in what is called the biggest cash changeover in history. The euro now is very, very integrated. It is legal tender in 20 countries in the EU, and then some territories outside like Monaco and Vatican City. Now it's over 2 decades old and has secured a spot as the second most used reserve currency after the US dollar. Now, if we talk about threat, I think the euro definitely could give the dollar a fight. But in terms of actually challenging the dominance of a currency that's been around for almost 300 years is not realistic. But other currencies like the Chinese yuan or the Indian rupee could one day challenge the dollar. But that's still many, many years away.
All right, we'll definitely keep checking. Thank you so much, Vada. Now we see Nigeria and South Africa, two economic giants in Africa, poised to further strengthen their bilateral relations. Recent discussions between the two nations have focused on key areas such as trade, investment, and migration. As these key areas are being looked at this point, the impact on both their domestic economies and the broader African continent is significant. Well, join us now to discuss. We have Diana Games, CEO, Nigeria, South Africa Business Chamber. Join me via Zoom. Great to have you on the show.
Yes, good afternoon.
Talk to me about this discussion so far on trade investment between Nigeria and South Africa. How do you see it shaping the economic future of both countries?
Well, you know, this is the Binational Commission and the State Visit. These are a series of meetings that take place. They're meant to take place every 2 years. Last year it didn't happen, so this is now 3 years. So I think if you look at the relationship, the idea is that we need to strengthen trade and investment through these discussions. And I think a lot of information is exchanged and people are talking, which is always a positive thing. How we move that forward, I'm not too sure, because it's a long time between meetings. At this stage, the BNC, the government officials have met, the ministers met yesterday, and the presidents are together as we speak. President Ramaphosa is having a press conference. So I'm afraid I can't give you the very latest because I've been waiting for the studio and I haven't heard what he said, but it is running on social media. But yes, the whole idea is that we iron out problems between in the relationship and talk about new areas of collaboration and engagement. And let's hope that is what's happening. I haven't seen any concrete suggestions coming out of it, but hopefully this will become the case later in the week. We are having a business forum with the president. I'm currently in Cape Town, especially for that, which is happening this evening after the presidents have finished speaking. So we hope to hear that there might be some movement on sticking points in the relationship, and migration, for example, would be one of them. In terms of trade and investment, we'll see what's been concluded and what areas of priority they're looking at.
And how do the two countries plan to manage migration issues, to foster greater social cooperation? Because we've had complaints here, it's really hard getting a South Africa visa from Nigeria.
So people say that a lot, and I agree that it has been, but I know that business has also been part of a bigger push, if you like, in South Africa, from South Africa, to ease the visa situation for Nigerians to come to South Africa, and that has definitely started to happen. People are getting longer term visas. The turnaround is much faster. There's all sorts of plans to make it easier for groups to attend conferences or to go for tourism purposes to South Africa. I think the danger is as South Africa makes strides to improve its visa regime, Nigerians are not keeping up, and we're going to be still stuck in that narrative. But at the same time, South Africans are also having some problems getting visas for Nigeria. We're only getting business people, even regular business travelers, are only getting 3-month visas at most. And this is, these are two countries that are supposed to be trading together. I just feel that, maybe there'll be some talk about that as well. The Nigerian visa is also very expensive. It's much more expensive than the South African visa, which is a handbrake on, for example, SMEs traveling between countries. Nigeria is already also a high cost environment to do business. So the cost of the visa is important in that regard. So I think we'll see. I'm hoping, the visas is always on the agenda, but I'm just saying that I know, because we've been in talks with our trade missions and with our government about the Nigerian visas, and I can just say that people really need to think, to share those stories as well about the changes that have been happening.
All right, we'll definitely keep tracking those changes. Well, thank you so much. Sorry for keeping you for so long. That was Diana Game, CEO, Nigeria South Africa Business Chamber. Thank you so much.
Okay, thank you for having me.
All right, now to other matters. Now, the commodities market. See, orange juice, a natural beverage enjoyed by people of all ages. In 2024, we see a drought in Brazil, which accounts for 70% of global orange juice production, as constrained supply causing a 64% year-to-date increase in orange juice futures to about $5.10 per pound. In Nigeria, the price of a 1 liter pack of orange juice has also risen by about 81% to 1,630 naira. Let's talk to Tomiwa Jewole now. Great to have you, Tomiwa. So, why is the price increase in Nigeria higher than that, in the global market?
Yeah, thank you for having me, Ladi. So, to answer that, we can look at three things. The one is that Nigeria is currently in an inflationary environment, which part of the reason is because of low output. Farmers are not able to go to the farms because of the insecurity in the producing regions. So that's because of that we have low supply of orange, which is needed for orange juice. So, the lower the supply, the higher the price. That is taking price up. So, of course, it's logistic cost. In the past 2 months, PMS price has gone up about 54%. So that, of course, is increasing the cost of transportation of the orange juice from the farm or where it's produced to the final consumer. And three is the fact that Nigeria still imports orange concentrates And when you look at what's happening in the global markets, because we see imports, that leaves us that gives us a risk at what's happening in the global market. So with prices high in the global markets, by the time you also account for exchange rate pass through, we have much price increase in Nigeria. But looking at the price outlook for 2025, if now that the energy sector is fully deregulated, we don't expect logistic costs to go up. And we know that the CBN is making policies and initiatives that we believe are working to stabilize the exchange rates. So given that those are the transit factors for inflation, if we look at the structural factor, we need our output to increase because that's going to save us from the external shocks. In 2025, we expect the global prices of orange juice to remain high because of the drought in Brazil. And Brazil is also dealing with, an incurable bacterial disease that's that's killing the trees and making the oranges bitter. And given the time of harvest for orange, which is about 2 to 3 years, we don't expect to see new harvest in the near time. So prices in the global market for oranges are going to be high. And if Nigeria doesn't increase output, and we're still importing orange concentrates, that's also going to feed back to prices of oranges in Nigeria.
All right, Tomiwa, but before I let you go, there's currently a trend in your report of a declining demand for carbonated drinks in Nigeria, with many people switching to orange juice at social events. So as a substitute, can orange juice effectively compete with, carbonated drinks in Nigeria?
Yes, so to answer that question, we can divide the market into two segments. So on one hand, we have an increasing level of health-conscious Nigerians who are concerned about, the sugar level in carbonated drinks. So given this segment market to be incentivized to look for healthier alternatives such as orange juice. But of course, Nigeria consumer is really price sensitive. And so the affordability is going to be an important key player in that sense. But one of the ways that orange juice brands and companies are now competing is through, these mini products and sensitization. So in that way, given the mini products, which sometimes is relatively cheaper than even the cheapest of carbonated drinks, consumers are able to get, healthier options, cheaper options, and then we see that the orange juice market or just juice market will be able to compete with carbonated drinks. But on the other side, when it comes to still events and social events, there's already this strong branding with carbonated drinks with social events. So by the time if you are looking to replace orange juice in social gatherings, that might be a little bit hard to do because of the branding, and most importantly, again, is the price sensitive. Nigerians being more price sensitive because you obviously have lower costs if you go with carbonated drinks for social events. But when we're looking at the fact that Nigerians are becoming more health conscious, there's a market for orange juice.
Thank you so much, Tomiwa, for breaking it down for us. I guess festivities are upon us, and we will get some orange juice later. Thank you so much.
Thank you for having me.
All right, now let's get some other stories. We see South Africa's economy that unexpectedly contracted in the third quarter after a sharp slump in farm output because of a drought in South Africa. GDP shrank by 0.3% in the third quarter of 2024, and that's according to Statistics South Africa. And we see the Kenyan shilling. The Central Bank of Kenya data showed that the shilling traded at about 125.52 to the dollar in the week ending November 21st. Central Bank of Kenya Governor Rufus Kamau noted that a slight decline in the value of the shilling could be attributed to pressure to acquire the dollar. So we're still seeing weakness with most African currencies at this time, even though some others are looking quite strong. But talking about currencies, we see Bitcoin there, pullback 0.03%, marginal pullback, but it's mostly green on the screen for a couple of altcoins out there. Looking quite strong. XRP, Cardano continuing with the bullish run at this time. Let's bring in Olumide Adesina now, financial market analyst. Hello, Olumide.
Hello, Radi. Good afternoon.
Yeah, good afternoon, Olumide. So this market seems to still be on steroids. Depends on which currency you're looking at this point. Talk to me about XRP and Cardano. This monster run seems to be continuing.
Yeah, it seems winter is coming early on Bitcoin, and pretty much news that the US government moved about 2 billion worth of Bitcoin to Coinbase hot wallet suggests that some sale might be in play, and that's why you saw Bitcoin breaking the key support 95,000 mark and is trying to recover. But XRP has been the star in the past couple of weeks. First, it overtook Solana. It looked like bookmakers were like market correction will come in play when it hit $2. And surprisingly, it's looking like going to break the $3 mark. It's at a 7-year high. Market value $155 billion, 3 times bigger than Nigeria's stock market. It really tells you that there are 3 reasons why players are betting on XRP. First, the staple coin in the system will improve much more utility in that asset class. Secondly, the relationship between Ripple Labs and the upcoming Trump administration has already placed them in a good setting. And last but not least, definitely buyers have increased their position. So, largely, just like you rightly reiterated, the altcoin market has pushed the crypto market to a 3.6 trillion market valuation, and that's really quite big when compared to an economy like California, bigger than that. So I think what we're looking next is how sustainable will December be. But it looks like Bitcoin will have to really get some strong fundamentals to really hit the $100,000 mark.
Right, and talking about the U.S. government transferring about $2 billion in Bitcoin to Coinbase, is it time to short Bitcoin?
Well, you look at Bitcoin performance in November, 40% up. You look at Bitcoin on a yearly spectrum, doubling in price. That will really take a lot of nerve to short the upside. And also, you look at the fact that yesterday, MicroStrategy increased their Bitcoin holdings by going to the market, buying at an average price of 95,000, and now they have over 400,000 Bitcoin. So, Ladi, I don't think you really want to short against those guys, but you can never tell as the market plays.
Yeah, definitely, you can't tell. And Michael Saylor urging Microsoft to buy Bitcoin. So imagine if Microsoft actually buys Bitcoin. But thank you so much, Olumide Adesina. Always great having your perspective. Thank you.
Yeah, thank you for having me. Yeah.
All right, so that's how most of the markets we're tracking looking today. Some markets still looking strong, while others are on the back foot at this point. But we'll give you more updates as the December trade continues. That's tomorrow. So thank you so much for watching. I'm Ladi Williams. From me and the team right here at Channels HQ is bye for now.